Welcome to another monthly update. I'm Junbei Liu, your portfolio manager for the 10-cap Alpha Plus fund. Now, I'm very pleased to say your fund has delivered 2.79% for the month, outperforming ASX 200 benchmark by 0.43%. It marks a really strong start for the financial year for your fund as well as for the Australian share market. Now, this month is all about rotation. Bit of a continuation from last month. We are seeing more people buying into underperforming sectors like the cyclicals, the resources, and then selling some of the winners like the banks. Now, talking through what sectors worked well, we're seeing the top performing top the charts. We've got the technology businesses done well, consumer discretionary. We've got healthcare marked the sector, taking the sector to positive territory. And we also have the resources, as I mentioned before, doing quite well. Now, the banks was down, and particularly CBA was down quite meaningfully for the month as people take profit to make room for the rest of the sectors. Now, what has done for your portfolio? First of all, we've been saying this for quite some time, that we pro-cyclical. We think with the interest rate cuts and with resilient economy, our cyclical sectors will do well. So our allocation into that space has definitely performed well for us. We also have become more constructive about resources sector. It has become very, very cheap. And with the commodity prices actually started rallying and staying very, very resilient, we do think that heading into reporting season, they will have a good result. And then with this good dividend coming through, and perhaps they were just too expensive, we certainly become more constructive with this sector. In terms of the companies itself now, just name some of our winners. Live 360 again topped the charts for us. So this company just keep giving. We are becoming, there are more sell-side analysts are becoming more comfortable with the company, initiating on this business, leading up to its results. And many sell-side analysts are now expecting, company will upgrade the guidance as well as talk to some of its advertising prospects and other product verticals that's coming through, all very positive. Now, Pro Medicus again was top the chart for us for the month. It announced a $170 million contract. Now, it's probably the second largest contract it's ever won. And what's also remarkable about this one is this contract actually expands for the first time into the new vertical, which is cardiology space for the company, and marks a lot of confidence into this new vertical, which could be as large as its current product. Now, you won't call it an active fund without taking tactical opportunities when the market price is volatile. During the month, we had one such opportunity, an example. That's Domino's. Now, Domino's has been tracking very poorly. We're not really seeing too many green shoots. Share price has been underperforming quite a lot. Now, heading into into July, suddenly we hear about the CEO, who only been in place for less than a year, is now leaving the company. Share price went down for over 20%, and we took opportunity of that. And we decided that this company, even though performance has been poor, there are very limited expectations into the next 12 months. And we believe with cost focus, and this company can well achieve what consensus is expecting. And it's trading at a huge discount to what it used to trade at. We see value in this company, and since then has rewarded us handsomely, literally just within a few weeks. As you know, we're an active fund, and we're very excited for reporting season because that's when some of our positions and investments do get paid off. We think this reporting season is not going to be as bad as what everyone expects. We don't think it's a catalyst for a market collapse and the like. We think the reporting season we will see corporates would deliver resilient earnings, good demand, a little bit patchy, but still showing resilience in revenue. We think the company will talk to falling inflation, which means the margins will be better in control for the next 12 months. And interest rate cut certainly will help with positivity in terms of outlook statement. We think that with resilient economic activity, with rate cuts and more rate cut to come through, the trade negotiation seems to be getting done across different countries. We do think market is in a good place. So stay invested and stay long. Now, thank you so much for listening, and thank you so much for your support as an investor.